You are listening to ChartingWealth.com for Thursday, the 27th of October, 2016. IYY total market down following the weekly and the two-day trend lines, continuing to move down 0.15% for the day. The latest two-day candle, as we zoom in on our chart, is actually positioned between the two-day trend line and the weekly trend line. We've had a market moving down on our percentage price oscillator that has recently replaced our MACD, the moving average convergence divergence indicator. Why? Because one of you said, Tom, why don't we use the percentage price oscillator? It actually uses percentages instead of dollars to figure out the calculations of the MACD. And I tested it and said, that's a great idea, JH. Thank you so much for the recommendation. Why do we do what we do? Because it works. When do we stop doing what we're doing? When it doesn't work. Okay, trial and error, and we like this one. Now we have seen the market going down since the 24th of August. On the two-day chart, we've got a weekly trend line down, and we have a two-day down trend line that we're going to need to redraw with the new movement that has just taken place. What I love so much about free stock charts and TC2000, how easy it is to redraw trend lines. Now, let's look intraday. Well, our candle right now is a down candle. It is the first day of the newest two-day candle. It will end. That candle will be drawn in full at the close of the market on the 27th. So let's look what happened intraday on Wednesday. On our 4-hour chart, had a down morning, a bit of an up afternoon. But as we look, we have big down wicks. The market was actually pushed lower than it ended up both in the morning and the afternoon, getting closer and closer to a crossover going down on the 4-hour chart. That is our pullback ending, which would mean a good entry point. Those of you who like to use the Heiken Ashi candlesticks may have used the pull-off somewhere on the morning of the 25th to jump into this down move. That would not have been a bad move on your part either. Okay. Those of you who want to play it safe, you're going to wait till we see our 4-hour chart rotate over. Derivative oscillators lost a lot of energy, along with the MACD moving toward the signal line for a crossover going down on our short chart. For those of you who are still trying to figure out exactly what all we're talking about, please tell me. Well, I'm guessing you have not listened yet to our 15-minute How to Read a Stock Chart video. How do you get that? You sign up for our newsletter at ChartingWealth.com. We'll send you a link with that. With the daily market worksheet we want you to fill out every day. There's a great training that we put out about 3 weeks ago on how to fill out the daily market worksheet, along with the layout that we use at freestockcharts.com. All of that is for free. We do all this for you. We just want you to practice. It's our giving back to you. So do it, please. It is going to pay you incredible dividends when you learn to read these stock charts, and you can do it. Okay, let's go to the S&P 500 on the two-day chart. Similar to the total market, the SPY, similar to the IYY, is down for the day. It's down more than the total market, which was down 0.15%. The S&P 500 down 0.20%. It's also a red down candle. Got a little bit of wick on top. Most of the wick is on the bottom. Again, it's been moving down also since the crossover going down back on August the 24th. That is on the two-day chart. Weekly chart's also in a down move. If we go to the 4-hour chart, what do we see? Again, lots of down movement in the morning, a little bit up movement in the afternoon, pairing that off. Again, for a 0.20 down move, getting very close to crossing over going down, which would allow you with the S&P 500 to get into an inverse fund like SH, if indeed it does cross over going down. This is the pullback we wait for, and then once the short chart actually crosses over going in the same direction as the weekly and the two-day, that is your entry point for the safest, hopefully, entry point to jump in to a down move on an inverse fund to make money when the market goes down. Isn't that sophisticated? Not that sophisticated, but pretty cool that you can make money when the market goes down. Now, again, we're not giving market trading advice. We are simply an education firm. We want you to open up your own virtual trading account at any of the online brokers and practice. Practice, practice, practice until you get perfect, as good as you can get, and you feel comfortable making consistently accurate trades or investments. And when you do that and have developed your own technique, because we expect you to look at what we do and then figure out your own way to do things. And when you do that and you finally get good enough that you feel confident, then and only then, with your own decision-making process and judgment, can you start trading. We don't make any of those calls for you. Nobody pays us to make any of those calls, and we do not. So practice. Practice every day. All we ask is 10 minutes. Let's get back to the charts. The Qs down 0.68% for the day. So what is that? That's over 3 times the downward momentum than the SPY and the IYY. What do we see going on? Well, we've got a big doji is what we're seeing. Again, these are Heiken Ashi candlesticks. If you can't read Heiken Ashi candlesticks, you need to take our online training for free. You can go to Charting Wealth's YouTube site or just chartingwealth.com and watch it. Very good for you. So what do we have? We have a doji, means lots of indecision, but I will tell you that after that huge up move on the 2-day candle on the 25th on the Qs, we've seen that pair off. We're still in a confirmed down move on our 2-day chart, moved down on the 26th of August, but for a long time running, we had an up move on our weekly chart. It made the Qs schizophrenic. It tended, even with down moves, to move up because all things being equal, the market moves in the direction of the largest chart, which is the weekly chart. Well, the weekly chart rolled over this last week in what direction? Down finally. It finally moved over going down. And that meant that getting into a down move was safer on the Qs. In fact, derivative oscillators continued to heat up going down, and the MACDs continued to widen its distance, or the PPO, from the signal line. That is a good signal that the Qs will be going down. Now let's look intraday. What did the Qs do for us? It's not yet crossed over going down, but again, it's getting close. Something like QID may be available to those of you who would like to do a double short. That's an inverse fund that goes in the opposite direction of the Qs at 2 times the rate that the NASDAQ 100 or the Qs or the cubes goes down. So if indeed you have the confirmation, you might want to jump in. So we shall wait. Hasn't happened yet. Be alert. Pay attention to the charts tomorrow. Look both in the morning and the afternoon. See if you can find an entry point. Hell, the charts may go up tomorrow. We don't know. But if it goes down, be ready to act. Lastly, we're going to look at gold. Gold is not yet crossed over going up on the 2-day chart, still confirmed down on the weekly and the 2-day. We can see the 2-day charts losing downward momentum rapidly, and the PPO or MACD is moving toward the red signal line, portending a possible up move, but it hasn't happened yet. What's been going on, though, with our 4-hour chart, which has been working like a dreamboat, started going up after it crossed over, going up back on the 13th, and man, has it gone up nicely. Those of you who jumped in, you may have sold half your position at that topper on the 19th. You may have sold some more of it at the topper on the 25th. It has lost significant momentum. Well, not significant momentum as far as the derivative oscillator goes, but the MACD is now paralleling, or the PPO, old habits die hard, is now paralleling the charts. We do see the red signal line is moving up toward it, so be very careful. It could pop up again, but it could also cross over and continue to go down. So if you've been an up move in gold, you should be happy with all that you made. But those of you who are greedy and want to stay in for as long as possible, just be careful. We've now come back through the down line on the weekly chart, so please be careful. Lots of downward pressure from those bigger charts, but our 4-hour chart has worked like a dream. Now, we appreciate you being with us. I've already told you how to get our newsletter. We so like to have your comments. If you have questions, problems, concerns, you need additional training, things you don't understand, let us hear from you at chartingwealth.com. Go to the website. Also, if you want to help us out, go to our iTunes podcast and subscribe to Charting Wealth. Give us a 5-star rating. Say something nice about us. You can also go to our Facebook channel. We post all of our trainings every day there. You can get them there also. But we'd really like to have you subscribing to us at iTunes and or at the website. And We also appreciate all of you, 1,000 plus now, 1,200 and something, who have subscribed to our YouTube channel. Please do that for us too. Again, we'd love to hear from you. Let us know what else we can do for you. Stay with us every day. All we ask is 10 minutes, and you fill out that daily market worksheet. It will turbocharge your understanding of how these markets work and how to be a charting master, which again is your printing press, your railroad, your map to wealth. God bless. Take care from chartingwealth.com.